Welcome to TradeTheNBI.com. This is John. This report is for the 29th of June, ending the month on a strong note so far in pre-market. We keep battling it. This time we went down to the 50%, and I was in lovely Naples during this, but still keeping an eye out. And of course, we went right to the 93, and of course, just like they did at the 61, big boys started to buy it up. And we can see that they were poised to do that with this massive move on our DOC, and it started to creep up. Also, we had shorts here in the DOC. Cyan moved below zero, and the short-term buyers had been sucking up a little bit at a time as it dipped, and this was enough catalyst to drive it up. Will it sustain? Now that's a whole separate issue we can talk about. Certainly from the NQ standpoint, it didn't even get close to the 50%, not even close, so much stronger. The vibrance there has really propelled the market in general. You had a little bit of a decay back in the euro, got right back into the zone, and of course as soon as they got there, they driving it right back up immediately, because they want that higher euro. Yeah, which is really helpful to the EU, because we can see how dramatic their growth rate is. Not still people jumping on bonds, trying to get out of equities, and I imagine it's just one of those parking the money kind of concepts, because unfortunately gold and cryptocurrencies have sort of fallen out of favor in general. This oil climb, anyone who doesn't think that's going to have a residual impact on inflation going forward towards the end of the year would be foolish. Doesn't mean there aren't going to be plenty of them. Given that, seeing this, you would have an inverse relationship, which this should not be moving lower given what we're seeing, but it is, and you have to go with what is, and that is still an incredibly devastating shakeout. Minus 41, minus 78, though we get to that minus 80, you're at that point of reversal. Going to be very attractive, because there will be a significant bounce. In fact, we should go ahead and just look at Bitcoin breaking down into new lows as it becomes less and less functional. Again, this is always something I've said, you have to have this transition to where this is something that can be readily traded for goods and services, and that transition has not quite taken place. It doesn't mean that it won't, it just means that until it does, the alternative currencies become difficult as far as transactional, and certainly having these futures makes it much more problematic to just drive it higher and higher and higher, because you have an alternative vehicle that really regulates it. And if the other cryptos as well move into that, because you may see some that will move aboriginal to the baseline, and that's simply because they don't have a futures product or some other kind of broadly traded product that will force them into compliance, at least a compliance that is regulated by supply and demand, not just by manipulation. So always good to look at that one. This has been a beautiful decline. If you look at it from we can even look at the daily. Daily's a little more complicated because we don't have that many days on our charts, but we started moving red early on, and none of that's changed. We're actually below the previous lows, where we actually got a buy signal. We're not seeing anything like that now. So completely out of favor, along with commodities. That leaves futures. Well, let's shrink out what happened during the day. Got a lot of light white lines here, and those all represent the various constructs of the new pink bar. Let me pause real quick and adjust this chart. Okay, we have the full range of the day in here now. We started over here on the left side of the chart with gold, which was slightly below the 50%. It had traded down near the bottom of the range for a little while, peaked up, got right up over there, and then obviously finally reached those lows again, which was expected. The power of that, though, is we went below that 2704, and we moved right to the 50% line. And look at this, made three beautiful baselines right at that low level, which was right under 2693 range, which ideally, it was beautiful because it was just below the 50%. Every time it got right to there, you had buyers wanting to scoop it up, let it come back down, buy some more, let it come down, buy some more, and at that particular point, it got more and more attractive, and we started to see cyans more dips below the red line. And you got to understand, it's not a common occurrence to be able to drive the cyan below red, even within basic bullish, that requires a significant amount of activity algo-wise. Beautiful, though, with some of the blue dots representing the high peak, which is our lovely snake development. A couple others that happen right there at the peak. Sometimes, though, when you get rolling in a broad range, you just get some consolidation and won't break down. That's always a possibility, but usually it's within a range. I mean, in this particular case, the last one occurred right here, this close, 22. The high ended up getting to 25, 26 and a quarter. So 4 points, well within the my prescribed range of 6 to 8. Plus provided additional opportunities at that point to add in, particularly as it began. Well, even once the breakdown happened, the breakdown is so fast. This is the difficulty thing with some of these times if you wait, because the breakdown bar usually is a significant bar, and if you hadn't already gotten into there, you oftentimes end up with a poorer entry, despite the fact that you faced a little bit of heat. Gave additional added opportunities as things improved, particularly the rise of the orange and falling of the steel right there is just a broadening of the mouth on a secondary note. And I look for those relationships. So it's that falling cyan, rising steel, in this particular case, cyan above zero. They all become very attractive for attack modes, expecting the final DOC spread. Are you sure you can wait for the DOC spread? I'm just throwing out to you why I created that configuration, because it does have that potential. Likewise, this one for pre-market that we're in right now. Let's just go ahead and expand this chart. And two, this is another good point. The darker green dots show up when you have the extremes below the red line, and you're like, well, but that should be bearish. Well, yeah, it is bearish, but not above the 50%. You've got to watch for that to be the reset of the shakeout, and that's why I made them green. Because it's sort of one of those warnings that says, hey, just because we faded doesn't mean we're breaking down completely, because oftentimes what we get is build up, reset, and in this particular case it's supported on there in relatively weak readings because you still didn't have the orange below, but then not only do you get the orange below, you get the orange below with red moving below. Above the 50%, well, you know where that's headed. And I mean, that's the easiest way to determine what's going on. I'm going to look additionally into the blue dots secondarily when it comes to shakeout. I usually prefer to have the shakeout be fading at least a little bit, or at least a minor plateau, but you don't always get that option. So it's a tougher one, because in some of these with the rising shakeout, I'm not buying anything that's closing below the highs. I'm only going to be shorting when I get up towards the 100%, because I'm expecting that it's likely that I'll get additional highs before it finally breaks down, and you want to have the best average. And I expect that I'm going to be probably having 3 entries in that kind of a setup, unless I believe it's just really super bullish and that there are no danger signs. But the reality is, if that were the case, you wouldn't be seeing all the red and the yellows for extreme retraces, because it could still be very bullish within those, but you know that they're still going to get filled. In fact, the one to fill for right here, let's wait for the screen to actually give me the, when it does that. Okay, I wasn't trying to move the line. Oh, I have it on snap mode, that's why. I was wondering why it wasn't letting me. This is 33. Anyway, we'll play with that one later. My point being is that we had this positive extreme, and the low at 1850 would have been the expectation on any entries. And of course, we more than filled that on the dip down too. from here. So the question becomes, at that particular point, when you have 1850, this comes in at 2250. Well, that's 4.25 already built into the setup. And you know that if you're going to be able to add into that, by the time you get up to 26 or so, that 18 becomes very attractive from an 8-point gain. Really worthwhile. Likewise, in this particular case, we have the low of 26.25 here in pre-market. Well, from the rise up, okay, fine. We ended up right here at 29.25 for this first bar, but I wouldn't be interested in anything until this one at 32, which was the close at the highs. Now, fine, you're still going to rise up. We went up to 37. So another opportunity up at the peaks again, positive extremes throughout all of these. So right now it's all the way back down to 31 from the 37. So that's 5 points on the movement right there. Still with the broader expectation. Now the broader expectation may take a little bit more time because of the 76. You've got all these ABMs and you're going to hit the long short algo right at it, pretty close. Just slightly above it now. But oftentimes what you'll get is you'll get a carry through on the one bar and it'll come back right back up. So it won't close there. So you have to pay attention. Now this one's already been filled though. Just to point out, we have that dip down all the way over here. So the most recent one is literally this one right over here. Just pointing that out so that you don't go back and think that that's the final. Right now it's 28.25 is the one that has to be hit, which correspondingly for the long short is 28 for the Deal Green, and long and short algo right there 27.5 and 30 range. So pretty consistent. I'll leave it at that for Friday. I'll be sending out indicators over the weekend for the start of July. Very exciting with the adjusted paint bar and that, which will give you a lot of flexibility. And I'll see about having the input adjustments so you can turn off certain ones. That way you don't have, I kind of prefer seeing the conglomerates of them build up, because at that particular point it lets you know that you're reaching peak moments. And you can see it depending on how many start to build in. They really become forceful from their identification standpoint. And there's a lot right here. So we'll see how this morning develops. We get a bunch of retraces prior to, but I would expect even during the market that we'd come back up to these highs. And we'll see how much supply is available at that particular point to close out the month. As always, trade well. We'll talk to you later.